As you're talking to people today, and as you're studying the like behavioral finance, and especially when it comes to money, how are some of the things that we're seeing in the markets impacting that today? So take Robinhood and AMC and cryptocurrency and some of that. Are you seeing a change in the way that investors are taking on risk with some of those that we're seeing in the market?
I think the biggest thing is, in March of 2020, we had the fastest bear market ever. S&P fell 35% in like 2 weeks. And then it was over, and it surged back to an all-time high almost immediately. And it happened so fast. And during that period of time, last spring, most people were not watching the stock market. Mm-hmm. They were worried sick about their health and how are they going to get their kids to school? How do I work from home? Very different from 2008 when it was a financial crisis by definition. That's what people were paying attention to. So, and I say that because for most people, even professional investors, the bear market, the COVID bear market, basically does not exist. It doesn't really comprehend. And that's very different from 2008 when you had this protracted recession and a long bear market. Very different from the Great Depression where it took 20 years for the S&P 500 to regain its losses. That's the kind of thing where that leaves a mark on society, whereas the COVID bear market didn't happen. And when you talk to investors today, they act and talk like we've been in a 12-year bull market. And I want to be like, we had the biggest bear market ever, like 14 months ago. And it just doesn't even compute. And so I think because of that, usually in a market cycle, you have a big washout that humbles people and changes behavior and pushes out the weak hands, so to speak. This cycle, it didn't happen. And rather than pushing out the weak hands, it like attracted them. Mm-hmm. It just like pushed them all in. People were like, let's go for it. And that's where you have, during what you would normally have as the washout period, you had the Robinhood surge of people day trading bankrupt penny stocks. Mm-hmm. Like the exact opposite of what you would expect during what was legitimately an economic depression last year. And I think, the longer the bull market lasts, the bigger the reckoning and the more painful the reckoning will be for people. When or if there is another big, huge, protracted decline in the market in the future, if it's been this long, since people have had a long decline, it's just going to feel more shocking when it occurs.
One thing, a question that got asked of you that your insights were spectacular, I'd love for you to share them, is they said, with the way the government, and I think we both kind of said this, the way the government handled this last crisis is probably the new playbook for how they're going to handle them in the future, and just what that does to contracting kind of those bear markets as we see them, whether it's printing money, giving stimulus checks, those types of things. Would you share some thoughts on that? And only because it's, and I saw this last, March, some advisors tried to time the market with clients and tried to pull them into cash. And then it jumped back so quick that you were toast. Mm-hmm. If you weren't invested in the market, like there's nothing you can do to make that up. And your insights about how those are going to be, shorter and probably shorter was great. So maybe just share a little bit about that.
First thing I would say, I didn't say this on stage, but just remember that right now, Howard Marks, great billionaire investor, last March, he raised a big debt opportunity fund to buy distressed bonds, distressed debt. And he raised the fund in like 3 weeks, which is like record timing for raising a big fund. And at the end of 3 weeks, at the end of fundraising, all the opportunities were gone. Yeah. It's just like everything happened so fast. And I think in terms of stimulus and shorter packages, once the government brings about a new form of stimulus, that becomes the baseline for the next recession. Yeah. And this time in last year, we had $3,000 checks to every household, double your unemployment benefits, trillions in dollars of QE from the Fed, and that just becomes the baseline for the next recession. It is one thing if the economy collapses and politicians say, nothing we can do, completely out of our hands, we can't do it. It's a completely different thing if the economy collapses and people say, hey, you are capable of sending me a $3,000 check, you did it last time, and now you're not doing it, so I'm going to hold it against you. So I think going forward, every recession that occurs, even a small recession, you're going to replay the 2020 playbook. Start sending checks in the mail, double the unemployment benefits, Fed brings out the howitzers and starts blowing cash throughout the economy. That's the new playbook. And does that mean that future recessions will be shorter than they were in the past? I think the answer is yes. Yeah. It does not mean recessions are going to go away. It does not mean that they will be shallower. It does not mean either of those two things. Does it mean that it's going to significantly reduce the odds of having a 5-year protracted recession? Yes, absolutely. So if I'm not a betting man, I'm not a forecaster, but if I were to assume that over the rest of my lifetime and your lifetime, we have less frequent recessions, very deep recessions that are short-lived, That would be what I would bet on.
Kind of see, it looks like that's what the trend is becoming as you look over the last, few decades.
You also see with COVID last year that when you are in a deep recession, sending huge checks to people is bipartisan. Both parties come together and say, yep, that's the thing. Write those checks. Let's do it. It's because it's very popular.
Yeah.
No one is going to argue against a check landing in their mailbox. They love it.
Yep.
So that once you show people that you are capable of doing it, that's going to persist.